Since the beginning of Wall Street, there have been criminals who have attempted to pose as ethical businessmen. Many of these criminals gained power quickly before suffering a harsh fall from grace.
Is Wall Street rigged to favor the rich and powerful against the small investor?
The likes of Jordan Belfort, who operated a boiler room to pump up the value of penny stocks. His traders would pressure unsophisticated retail traders to buy shares of companies that he owned, thereby artificially inflating the stock prices and allowing him to sell his own shares at a high profit. It's a famous method used even today to manipulate stock prices. It's called pump and dump, where public figures will promote cryptocurrencies. Celebrities endorsing cryptocurrency projects is not a new practice, and celebrities' endorsements of cryptocurrencies and NFT projects wrecking people is also nothing new. This is the reason why you are not making money, taking anything you hear at face value.
They know, they predict what you're going to do, so they do the opposite. Because if they don't, they're not going to take your money. So you're bound to lose because they know exactly what chart you're looking at. And millions of people look at the same chart. Oh, I've looked at the charts. I know where it's going to be a sell and a buy. No! Because they know that. They see the same chart. They're not going to give it to you. If they give it to you, if they let you buy it at that level, then they're not going to take your money. They're there to take your money.
Since stock markets were first established centuries ago, Wall Street have been manipulating share prices for financial gain. But in recent years, the growth of social media has accelerated this practice at an alarming rate, making investment decisions for retail traders more difficult. According to a BuzzFeed investigation, the top 20 fake stories about the 2016 U.S. presidential election gained more Facebook engagement than the top 20 news stories from the major media sources, and most average investors lost money during this time. Most investors lose money because they buy and sell based on current events and what's trending. Wall Street knows this, so they can spin the truth to mislead investors. The cost of market manipulation to regular investors is in the billions of dollars, and the SEC is always on the lookout for unfair trading practices. But skilled stock market manipulators use deceptive tactics and may go years without being discovered. Wall Street has only one goal: to make insiders super rich and shareholders rich. The public interest and the rest of the world are never part of their wealth.
Wall Street attracts and rewards what I call a locker room culture. There are the people who just have to win at football or soccer or something like that. And they're just so competitive that whatever A is doing, they have to be as good or better than A. They do enormous damage to the rest of us with their damn locker room culture that has to win. And is not very squeamish about what they have to do to win.
Between May 2008 and August 2016, J.P. Morgan precious metal traders engaged in a widespread spoofing, market manipulation, and fraud scheme. They will place orders that they intended to cancel before execution in order to drive prices on orders they intended to execute on the opposite side of the market. These deceptive orders were intended to inject false and misleading information about the genuine supply and demand for precious metals futures contracts into the market. When it comes to financial markets, you need to ignore the world and become a lone wolf. Research the company on your own. Study the financial reports of the company. Check the debt. Find the company's competitors. Analyze the future prospects. If the company looks good on paper, go for it. They will say it's a stupid company, but always remember what Warren Buffett said.
You're not right or wrong because 1,000 people agree with you. And you're not right or wrong because 1,000 people disagree with you. You're right because your facts and your reasoning are right.
Believe it or not, roughly 80% of retail traders lose money when trading stocks, forex, or other financial instruments. The reality is that while 80% of traders lose money on their accounts, the remaining 20% profit from their mistakes. To be clear, it is not because the stock market is rigged against you. The stock market is not rigged against the average investor. There are laws and governing bodies in place to level the playing field for ordinary investors. The Securities and Exchange Commission's mission is to protect investors while also ensuring fair, orderly, and efficient markets. However, there are narratives and systems that have been fed to average investors. You should be aware that 99.9% of these systems do not work. If you ever hear a self-proclaimed millionaire trader say, "I have this trading system that will make you $10,000 per month," just know that it's BS. There is no trading system that can guarantee monthly profits. This is the narrative that Wall Street brokers and IBs have pushed for decades. Wall Street brokers make a certain percentage in commission whether you win or lose. That is why brokers encourage IBs to push the narrative that you need to engage in excessive trading, overtrading, or day trading. By engaging in high-volume trading, you are enriching the broker by increasing the commission they earn while you lose money on your account. Because day trading, it's a loser's game on average investor and a winning game on brokers.
Wall Street makes money on one way or another, catching the crumbs that fall off a table of capitalism and an incredible economy that nobody could have ever dreamed of a couple hundred years ago. But that they don't make money unless people do things and that they get a piece of them. And and they make a lot more money when people are gambling than when they're investing. I mean, it's much better to have somebody that's going to trade 20 times a day and get all excited about it, just like pulling the handle on a slot machine.
There are numerous warnings about the risks of day trading in the stock market. Even the SEC warns against day trading, saying, "Be prepared to suffer severe financial losses," and day trading is an extremely stressful and expensive full-time job. In one 14-year-long study of day traders in the stock market, only 1% of day traders actually consistently earned money. Wall Street brokers are also frequently financially motivated to recommend investments to customers based on the amount of commission received for selling a specific investment product, regardless of whether that product is the best option for the customer. IBs also make a certain percentage when you get to trade with the broker they are promoting, and they also make thousands of dollars selling their useless trading courses in YouTube videos and other social media platforms. Sure, some people will always believe the hype, and those people will always fall victim to the snake oil salesman, on the other hand, want to learn and are furious at the education they have received. And we can't blame them. The stock market is also filled with conflicts of interest. For example, investment banks often offer lucrative underwriting fees to companies they are covering, while simultaneously promoting those same companies' stocks to investors. Such conflicts of interest can lead to biased advice, which puts the average investor at a disadvantage. Furthermore, high-frequency traders can gain an edge over retail investors by gaining access to data ahead of the market. This allows them to make more informed decisions about their trades and reap greater profits from their investments. What's obvious is obviously wrong. Buying a stock just because the news headline says it's the best buy is wrong, and you will lose money. It implies that having little knowledge will result in you lemming-like following the herd. Investment success requires a lot of work and effort. Like a surgeon who is only partially informed, an investor who is only partially informed can make serious financial mistakes.